So welcome, everyone. I guess this is one of the second last session, so thank you all for staying back for this. I'm Samantha, as Mike said. I'm not a VC, but I run a PR agency helping blockchain, crypto, and DeFi teams tell their stories, and I'm really excited to get into just investing in the crypto ecosystem and hearing from this amazing lineup of speakers. So I want to just go across the panel and hear from each of these VCs and investors how they got into, well, introduce yourself again and tell us how you got into crypto investing. So Jill, do you want to kick it off?
Yeah, thank you. My name is Jill Gunter. I am a venture partner with Slow Ventures, which is a seed stage focused venture fund based in the Bay Area in the United States. We're a generalist fund, so we invest in regular fintech. Outside of crypto, we invest in consumer retail startups, we invest in enterprise SaaS, and then we, of course, invest in what I personally am most excited about, crypto projects as well, and that spans everything from layer one protocols all the way into infrastructure and equity in companies. Very briefly, I got into crypto via Wall Street, of all places. I was working on Wall Street sort of out of college, post-2008 crisis, and I got an inside track view into everything wrong with the old school financial system and was motivated into getting into a space that was working on changing all of that.
Thank you. Jamie?
Yeah, so CEO and founder of Outlier Ventures. How I got into crypto, I can't really remember now. It's been almost 8 years, which is quite scary. It's like nearly a decade of my life, like 1/4 of my life in crypto. But where we are today is we're an accelerator. We're focused on what we call the open metaverse thesis. So that's looking beyond perhaps the traditionally quite narrow financial services use cases within crypto and extending it into creative industries, the creator economy, gaming, virtual worlds, all that kind of stuff. We're about to hit our 100th portfolio co this fall, which is awesome. The majority of which have happened in the last kind of year or two. And we're about to double that in the next 12 months alone. So that's indicative of not really just our growth as a company, but also the industry as a whole. So I'm very happy to be back on stage. It's been a while.
Awesome. Thank you, Jamie. Min?
Hi, everyone. So I'm managing partner of Ethereal Ventures, which is an early stage fund currently in stealth. I'm also an advisor at Consensus, where I led venture investments for the last few years. And Consensus is a global blockchain software company, one of the earliest investors in the space, being a core builder of the Ethereum ecosystem, incubated projects like MetaMask and Infura. Previously, I started my career in traditional finance and fixed income investing, and then fintech and crypto. So kind of going like full circle. But I came to crypto from fintech. Actually, had the pleasure of working with Richard, and I think it was frustration with the existing payment stack, and that made me believe that it might take 5 years, 10 years, but the future of financial applications are going to be built on crypto rails. It's such an unfair advantage with instant settlement, 24/7, global by design, and very excited to be seeing it happen before our eyes.
Cool. And Richard?
Good to be with all of you here on the panel.
Yeah.
So my name is Richard Muirhead, and I'm managing partner at Fabric Ventures. And in a second, maybe I'll describe what we mean by our thesis, which is all around what we call the open economy. But I came into it really having built a company in the network infrastructure space, and then building a little piece of the kind of cloud infrastructure, and wrestling with the problem of trying to get well-paid, super knowledgeable, skilled people to collaborate to solve complex problems. And then my second company, and so started looking at how could you define mechanisms and incentive structures to do that, and saw the kind of rip-roaring success of Wikipedia and Facebook in doing that kind of from a bottoms-up basis. And then when I stumbled into first Bitcoin and so forth, saw that was the opportunity, that if you could give people ownership of their identity and their data and of value, then we can all coordinate together to solve really quite challenging problems. And that is kind of what we think of as the open economy. And we've invested in everything, like many people here on the panel, from layer ones like Polkadot and Near and so forth, through to recently announced investment in new stable coins, Euro stable coins, through to various different players in the play-to-earn space, which has certainly been catching the headlines.
Yeah, totally. Thank you guys for that brief introduction. So I want to kind of take a step back and look back at the year that we've had. We're obviously in a crypto bull market. According to research by The Block, VC investment in the crypto space has seen a 90% increase quarter by quarter, especially in 2021. These figures, I mean, I'd like to hear from the panel. Are they surprising to you, or are you not surprised? And also, what do you think are the major factors that have contributed to the growth? I mean, Jill, do you want to kick it off? I'm
not at all surprised to hear of the dramatic growth in investment and capital coming into the space. It's funny, so Slow, as I mentioned, works across markets. We work in consumer and enterprise and so forth. And I'm often talking to investors outside of crypto in the venture world, and they all love to tell the war stories of how the last year has been out of control for them. And, it's just so many high quality deals, and just the velocity and the pace at which those deals are getting done. And coming from crypto, I have to just sort of quietly smile and know in my own mind how much more quickly even the crypto space is moving. Yeah. But I think that that's all very bullish for the space and very exciting, but boy, is it hard to keep up at times. Yeah, Jamie, because you were saying you are probably going to double your investments in... Yeah,
just the volume of throughput that's going through our accelerator. We have an protocol agnostic one, and then we also have some ecosystem collaborations with like Polygon, Filecoin, Polkadot. We've got several more on the way. But to kind of your main point around, you mentioned the word velocity. So what's interesting this year versus other years, even when we had this correction of whatever it was, 70, 80%, the pre-seed seed stage deals kept on happening like nothing was going on, which is like the first time I've ever seen that. And that's where I got really bullish about what's about to come, because normally people start kind of reining in what they're doing, especially at the early stages, or valuations kind of collapse, or you get discounts. There was no discount. Deal making happened at the same velocity as when the prices were high or where they are now. We're seeing a lot more entrants coming into the space, coming in earlier, and doing kind of party rounds, as they're called. So basically, a group of people just wade into a round, like hoping one of them's done some DD. Obviously, going through an accelerator, we are part of that process, but there's not much discipline in investing right now. Valuations are very punchy, and I think we're only just getting going. I think the next 12 months is going to be even more bonkers.
Right, okay, so increased velocity in deals and in investments. So, all right, how do we keep up? Min, how do you keep up with it all?
Yeah, I think in a lot of ways, crypto for a long time has been seen as a parallel universe of some sort. But in a lot of ways, I also don't miss the times where our poor founders couldn't raise at like $3 million valuations because they were a crypto company. Mm-hmm. And I think we have to think about what does it mean to be a crypto company. So, SoRare, for example, which is, I think, probably the best performing company in the 2019-2020 vintage, is an equity investment where they use NFTs for, fantasy football, and they have, more than 200 clubs signed up at this point. And if you're a generalist VC, you're like, is this a gaming company? Is this a consumer company? Is this a crypto company? But it's certainly a company that you can't miss out on if you're a VC at this point. So I think for us, ultimately, we really focus on smart technical founders, because in our experience, they're the ones who move the needle. They're the ones who just dream the frontiers that we just can't expect. And we just, provide them resources to experiment as much as possible. I think we're still, when you consider the sort of Web3 infrastructure stack, like which the promise is user-controlled platforms. We're so early in that innovation arc. So while it seems a bit overwhelming, like, knowing where you want to play, and for us, we just want to be, we're a humble pre-seed seed fund, so we just try to be first check-in. It just adds a lot of discipline as an investor, so you're focusing on where your comparative advantages are. And the same thing, I think, as a fintech VC, and we've seen a lot more fintech VCs get into a game, which is fantastic. There's a lot of ways fintech VCs can help fintech firms who have crypto adjacencies dealing with like digital assets, and there'll be tons of growth in that segment too.
Mm-hmm. No, thanks for that. I guess it's really challenging to stay focused and disciplined, especially in this market. But Richard, how does Fabric VC like stay focused, and what disciplines and trends do you look into, or have you been looking into this last year?
I'm looking for tips, by the way. Everyone's looking surprisingly
I'll
fresh.
Go
not how I feel at the moment.
I'll try. I mean, maybe first on the how to keep up. I don't think you can keep up. I think you have to lean on the community, on the hive mind, this kind of like effectively DAO, if you will, that we already exist within, this intermeshing of all the Discord groups and the Twitter groups, and I think you just surf that as best you can. I think in terms of keeping focused, I mean, I think we probably have 10 different opportunities right now that are kind of basically at the investment memo stage, and we're not saying we'll conclude necessarily on all of them. The focus is about just saying no to things, to be able to go deep enough and move fast enough. So there is, I totally agree, and fortunate enough, I'm also a little bit a part of the SoRare journey, that there are some equity-based investments that have definitely attracted the interest of VC firms sort of crossing over. I think there's an archetype also of investments that is perhaps even more challenging, which is that if and it borrows a lot from the kind of deep tech investing world, that you're looking for the highly technical founders who come together in a very complementary team, and just like that beautiful balance of confident and humble, and you want to work with them. But the challenge comes, of course, meeting them. So again, you've got to be somehow connected in a number of different ways, and somehow you just join the dots on that, whilst still being inclusive and like just not relying on introductions from in that sense. And then you've got to move super fast, because if they're going to generate something that ultimately is going to have a token at the center of its a value accrual mechanism, then it may be that there's only one quite widely spread round, a party type round that goes on, and not multiple opportunities to be doubling down. So you've got to move fast as well. And we've seen the more crypto native funds from across the world move fast to snap up those opportunities. So I mean, I think that's key. And so at the end of the day, even if you're moving fast, you need to be able to communicate to these folks what you're going to be able to add to the equation. Not just, hey, we're in Europe and we know where the great restaurants are or something, but we can actually work around your token mechanics. We can actually help you find liquidity for the network that you're building. We can actually source the talent that you need. And those are sort of endlessly challenging areas, and that's what we focus on.
Yeah.
I'll take notes on the restaurants though, as well. I also just wanted to add, Samantha, though, that I think in terms of this question of how do you keep up, I think that our days are numbered as just being crypto investors, actually. I think increasingly you have to specialize, and you have to be a crypto infrastructure investor, or a DeFi investor, or a DAO investor, an NFT investor. I think that's increasingly the way that it's going, and I think increasingly that's what we're seeing demand for from founders, is that level of specialization, which is not an answer as to how to keep up with the space as a whole, but I think it's just the reality.
Yeah.
I mean, I think to build on that, you probably got first-hand experience of this.
Yeah.
I think that's because increasingly those investments require you to be quite active in the network, whether it's liquidity providing, whether if it's a play-to-earn game mechanic. You can't just sit on it passively. You have to put these things to work. So do you outsource that? Do you do it in-house? There's an increasing burden on the investor to be a network participant, and some are set up for that, some aren't, but it does force you to begin to specialize in that value add.
Yeah,
I think also the global nature of most protocols and projects adds a layer of complexity. So for example, our fund is also remote, so we suffer a lot of the challenges that our portfolio companies do with regards to paying people in multiple countries, taxes, bank accounts.
Bank accounts.
Oh yeah, but I mean equally.
Who has bank accounts these days?
But I think equally, like, you know, a lot of as investors, like, we really take the fiduciary responsibility of LP's capital very carefully. But at the same time, I think the investors who are the boldest and take risks will also have the biggest returns. So there's a lot to figure out in terms of structuring, like, what does it mean to participate in a DAO? What does it mean to sort of buy NFTs in your fund?
Yep.
I would like stake your tokens and earn income, run routers for, like, you know, your companies. So it really does change the game, and it's pretty exciting. But I think, you know, ultimately everyone's figuring it out together.
Yeah.
We get like questions from institutions all the time. How do you guys do it? And we're like, we think we're doing it correctly. But
yeah, no, I actually want to expand on that point, because I do think that there is a difference between I think everyone on this panel here are all crypto-savvy investors and understand the crypto-native world. But then there are, like, I guess, VCs, traditional VCs looking into the space, even fintech VCs looking into the space, wanting to get in on potentially, like, DeFi, DAOs, but they don't have the infrastructure. And then they miss out on the deals because they don't have the USDC to deploy into the wallet, the multi-sig wallet, and to close the round, like, tomorrow, for example, because they're raising at lightning speed, right? So, yeah, for some of you on the panel who have come from a, you know, maybe tech VC investing background, like, yeah, could you just explain and maybe educate, you know, people on the difference between investing in crypto and in traditional sense?
Yeah, I'm happy to speak to that. Yeah, I mean, there are a lot of infrastructural considerations, certainly, particularly if you're going to try to hold, you know, above a certain threshold in liquid tokens, particularly even if you're going to try to be actively involved in trading those tokens, or even in, you know, participation networks. Staking, the tax implications of staking are a whole headache that we could spend a whole panel on at some point probably, but I'll spare all of you today. And then even just in terms of thinking about where you're domiciling the entity of your fund that's investing in all of this. A lot of projects these days are only asking for USDC. You know, you have to think suddenly 5 steps ahead about, okay, do I have a custodian account set up? If that's the direction that I'm going, is it funded sufficiently with USDC to then be able to send through? And all of these things, you know, it sounds like it's just sort of this administrative headache or this infrastructure headache, but it does also demonstrate then to the founders, how invested are you in the crypto ecosystem? How native are you? And that in and of itself is a signal of what type of value you might be able to bring to the table. And that, more than anything, more than any of the administrative headaches that I could go on and on describing here, I think that that's the biggest hurdle for mainstream investors getting into the crypto venture world.
Yeah. Richard?
Yeah, I mean, I can build on that, but I almost have to ask a question like, who are we trying to educate about this? Because if we're talking to a mainstream VC about getting into the space, and we're talking about that admin overhead, I mean, that is like not even table stakes, because you're just not going to be ready to do the transaction. That needs to be done sort of way in advance, maybe sort of years ago, and probably a bit of a constant battle to have banking relationships that aren't being questioned by TradFi, should we say, to deal with. Although I do see very many different standards for this for different jurisdictions around the world, but to be doing KYC and AML obviously on your investors, but also on your targets, that's an interesting challenge in some of these projects where at least most people don't know who the actual founders are, or some of them are. That's a unique challenge. So I think even just starting at being in a community that is going to reference you well, as someone who's participating as a protocol politician, should we say, in the governance of some of these platforms, getting to that point is how you can even access the opportunity, let alone be successful in securing it, I would say.
What I would say is, as an accelerator, like a long time ago, we stopped educating traditional VC. It's just like not worth our time. I mean, if you're not here, then there's enough people that are. It's funny. We still get calls. People think they can lean on their heritage in something else. Let's have a coffee and swap notes. It's like, sorry, I've got like 100 startups to accelerate. So I think I don't know how everyone else finds it, but those calls just quickly don't happen.
So the rules are changing. Like the traditional VC rules are changing, and you guys are probably, I guess, I would say pioneering, or kind of like, on the ground, kind of like really looking at crypto native projects and teams. I want to touch on kind of so we talked about like the velocity of like deals coming up and investing, and we also asked about how to keep up, but there is obviously still a big knowledge gap with a lot of things. I mean, things are moving so fast. So how do you guys kind of stay on top of the trends, or what's going to be big in the long term, and how do you do your like due diligence or research now?
Read Rect and spend too much time on crypto Twitter.
Crypto Twitter, right?
So true. It's so embarrassing,
really?
But it's
you have to do at least 2 or 3 hours before you get out of bed. In the morning,
on crypto Twitter.
Get up at 5 or 6. That's the first stint. I mean, it's
No, I
pretty
see that,
challenging.
yeah.
We've now managed to end up, and also kind of with a remote first approach, with a couple of people in London, Lisbon, Berlin, Paris, Luxembourg, so quite spread out, and then going back to this point of a specialization. With some folks who, even though I try and resist this a little bit, because I still feel there's huge opportunity for sort of cross-fertilization between the different areas. I mean, like obviously DeFi primitives are being applied to the play-to-earn space and so forth. But we do have people who are going deeper, and necessarily so. So maybe it's like your top 10 or 20 people in the play-to-earn space on crypto Twitter. You better be sort of tracking what's going on there to be keeping up to speed with the latest,
Wow, yeah.
the latest DAO that's being created with its native token.
Yeah. Did you want to add to that?
I mean, I'd just say, so as an accelerator, really we just have to be quite generalists. So we might have certain themes, but really our job is to reflect what these guys want to invest in, and to try to bring a good volume of high quality startups to them. And even though we've got near 50 full-time staff now, even with that amount of internal people, you just can't keep up with all the various trends. It's just not possible. So we lean on both our membership. So we've got a membership of another 50 people, including some of the top Web3 founders that are venture partners that help us source deals, that kind of help us do DD, that we can increasingly lean on. But ultimately, we've got a network of over 1,000 investors, and often they'll refer things to us that they see that a bit too early for them, but they quite like. They'd like a bit of risk taken out of it. And so I think one of the things that we're really seeing a lot is increased collaboration within and across the industry. And so going back to your earlier point, if you're outside of that, I think you're at an asymmetric disadvantage if you're not part of that community. You just can't, doesn't matter your scale, you can't compete.
I think that I would add something to that, though, which is that one thing that I love in particular about the crypto community since I got into it, 7-8 years ago now, is how inclusive and welcoming it is, provided you're getting into it for the right reasons, which end up being sort of genuine interest, at times, ideological. We don't need to skirt around it. And I think that what founders increasingly sniff out, and I think what you're alluding to, Jamie, perhaps, is when people are just sort of coming in as tourists. It's an opportune moment. They want to show up in the space, do some hot deals, and then, be on their merry way and not really invest themselves for the long term. And I think that that's a differentiation that I would make. I think that there are plenty of individuals, investors within funds that are, well-established funds in other realms who are getting into it for the right reasons. And I think that that's very obvious. And I think that they tend to be welcomed with open arms.
Again, I have my own personal war stories about working with VCs when I was building a company, who then, for the fund decided to change the strategy, and therefore the individual change or whatever. And this is not what you need when you're in the trenches. So I think the founder instinct is a good one on that. And so I hope they continue to sniff that out. And building on this sort of point, I think maybe was being made earlier, that the division between what was mainstream VC and mainstream finance and mainstream capital markets is growing bigger. I think the fundamental advantages that are being built in decentralized finance are so great that ultimately you will have a kind of a flippening, that things will shift that direction. I think it's that significant. Nonetheless, when you do later stage investments that are equity based, something like a So Rare, you do have some fantastic investors like Peter Fenton who pop over and have a very good nose for the opportunity and for the company building, and they can cross over. But that's more on that side of the house of investing than on the token side.
So it's a mixture of crypto Twitter, leaning on your community, a bit of like other investors or signals, but then also like founder instinct. So a bit of that. Okay. All right. I just want to maybe touch on. So we talk about like being focused and having a discipline, and like each of your funds have a special like well, I guess Jamie's a bit more general. I want to get your takes on projects building on multiple different layer ones. So like obviously there's Ethereum projects, then there's the Solana, Polkadot, now Avalanche, and Near. So I mean, yeah, if any one of you can jump in, there's a lot to follow there as well. Where do you begin?
I think,
It's
I'll
a good
take
one
a
for you,
stab.
man.
Yeah.
You notice we all just swiveled around here.
You can share about, Ethereum.
I mean, I think firstly, the types of funds in our space are really varied as well. Are you a VC fund, a hybrid fund, a hedge fund, a crossover fund? There are many different funds with different objectives. So mine is maybe the perspective of someone who's doing a VC fund. But ultimately, we're really excited about investing in product innovation. And I think it's non-controversial to say that, we are in a multi-protocol world. And the question is how, what does the multi-protocol interstate highway really look like with all the bridges, and, where will value accrue? Where are developers going to end up? Right now, you see a lot of bridges that are trying to divert liquidity from Ethereum, but that's not going to be the case long term. And ultimately, these interoperability layers need to be extremely strong and robust. We've seen quite a few hacks there already. There are certain protocols that have sort of won out that use case. At least it seems so, right? Bitcoin seems to have won out the store value use case. I think Ethereum seems to have won out the high value asset settlement use case. We see lots of amazing sort of privacy focused L1s, and we think that there's absolutely space for them as well, because that's a missing layer. A lot of blockchains were not built with privacy in mind. And of course, you have something like Solana that, for anything that has high frequency trading, and maybe you can trade off certain elements for that kind of, low transaction fee and high throughput. So we're just really getting started. And I think, in terms of our portfolio companies going cross-chain, that's something that is certainly on their minds. But we're also seeing a lot of exciting layer 2 developments happening on Ethereum. Arbitrum and Optimism getting live, and obviously Starkware, ZK Sync coming on too. So will other L1s start being L2s on Ethereum? Is that ultimately what happens? That's also a good possibility, and it's really exciting to see. It's one of our key themes as a fund for the rest of the year.
Oh, that's so interesting.
Yeah, so I said earlier, a lot of our growth for the accelerator is now coming from collaborations with particular protocol ecosystems, and if you look at some of them, they seem quite competitive at surface level. But the reality is, so some people say, well, how can you work with a layer 2 for Ethereum, like Polygon and then Polkadot at the same time? The reality is, at the moment, we're in conversations with probably, I don't know, 1/4, 1/3 of the top 50 protocols that have, entities that might managed funds. And we select our partners based upon two things, really. One is the technology ready for prime time, or is it a point of friction? And do they have a sufficient level of capital allocated to that protocol? Not just their own funds, but like funds who have pockets or funds dedicated to that protocol. And because you need, ultimately, it's not our job to push a protocol on the startup. Normally, they're coming to us. They've made their selection for whatever reasons. And the thing we have to assess is, does that add execution risk or not to ultimately creating a high-growth startup? And is there enough capital that's going to go into this thing to make sure it's well capitalized? So those two things need to be there. And beyond that, we don't really care. Outside of our thesis, and the principles that we care about in the startups we want to see in the world, like how we get there, we don't really care.
Okay. I want to just quickly touch on, I guess we moved towards the kind of last part of our discussion on, I guess, the trends and predictions for the industry. So I guess as investors, how do you differentiate between, a development phase or the hype phase? To give you an example, NFTs have been around since, I guess, CryptoCitties were around a few years ago, but then it's just taken off this year, maybe spearheaded by NBA Top Shot, as well as, I guess what Sorare's doing as well. How do you guys differentiate between that, and also what are you seeing coming up this year and in the months and year to come?
I think that the biggest lesson from the investment side, having now been through several cycles in this space, is to just always remain open-minded and not write off a given concept or product idea or sort of niche of the industry. It was very easy sort of post-CryptoKitties to write off NFTs, and little did we know that we'd be sitting here 3-4 years later having practically a whole conference about NFTs, right? And that's one that I got very wrong at the time and have since rectified my ways, but that's always the best and hardest way to learn a lesson. In terms of what I'm excited about new functionalities that will be opened up that will cross-cut all of the different spaces that we're seeing, whether it's DAOs and NFTs and DeFi and so forth. So things like privacy, what does that look like as it's being implemented across all of these different spaces? That's what I'm paying attention to.
Cool. Amy?
So as an accelerator, our job really is to be ideally no more than 6 months ahead of the wider venture market. Because if we're too far ahead, if we're like a year ahead, things that go through the accelerator don't get any funding because nobody else is investing in it. So we want to be just ahead enough, but not too far ahead. So we were talking about NFTs and DeFi and how we thought a boom was going to be happening around this time last year. We published the Open Metaverse thesis the first week of January this year. And like how we get there isn't rocket science. It's not because we're geniuses. It's just literally we will speak to 3,000 startups at pre-seed stage. So we just have this unique window to just do some basic pattern recognition and say, shit, it looks like NFTs might be a thing. Here's some trends within it. And then we just try to communicate that to the market in order to prep it. So we have quite a unique advantage just by virtue of the volume and the stage that we operate at.
Right. Lynn?
I think probably 2 things. The first one is, decentralized identity or reputation. I think we're just at the stage now where the space is so pseudonymous, but you see a lot, like yesterday on the DeFi panel, they were talking about your favorite anon, and we feel like we know 0x Tuba or 0x Sisyphos, even though it's really an anime character and a pseudonymous handle. But I think people want to be seen, and ultimately, how do we create more personalized applications? How do we move to more capital efficient DeFi that all boils down to identity and reputation working? I think the second thing I'm excited about is to really see excess funding for tooling it's something that I think, like, we're still early in the stages of, like, and, the space, the values of the space really tend towards open source and collaboration and composability. And there's still a lot of tooling that we're sort of missing to make the developer experience more robust. On new protocols like Solana, like, a severe shortage of, like, say security auditors. And we need, like, people to be working on things like that to make it safe for consumers to use.
So building on to Jamie's point, the way we think about it is luckily we don't really have to predict what's going on, just kind of be prepared to spot it, kind of when you see it. It's good for me because I felt in my startups I was always a little bit too early. We were pretty early in the kind of NFT space, backing Decentraland, who co-authored the standard back in 2017, 2018. And so I guess in a sense that has played out. And maybe connecting it back to this point of what's going on between the different layer ones, I think what is often underestimated is the importance of go-to-market and of community and the power of getting that right. And also how early we are. So if we take the success of Axie and from Sky Mavis, there's only just say 1 million or 2 kind of players or so possibly, but whereas something like Clash of Clans, there was probably like 100 million players or of the order of magnitude. So we're super early, but yet that kind of success can now propel them forward with their Ronin sidechain and an opportunity to build some success around that. So we're that could shift the direction of travel of kind of the ecosystem. And I think, connecting again to that point of community and go-to-market with this question of identity in these decentralized communities that Min made, I think the whole move towards DAOs as a way in which capital is allocated and decisions are made opens up an opportunity that I don't know whether we're as early as 2017, with respect to NFTs, and therefore it's going to take several years for this to play out, but how do you vote? How do you hire people into DAOs? How do you get rid of people who shouldn't be there? Who decides who shouldn't be there? How do people get rewarded for participating in them? Because certainly we feel that intersection of capital and governance and almost a society is just incredibly potent, and so it's going to lead to great things. So that's an area that we're focusing on.
Yeah, I mean, it's been fascinating to see this whole entire year, seeing like just DAOs, investment into DAOs, and that rollout, even VCs investing into DAOs. And then I think touching on Min's point, like people are still working it out, people are still learning, and it's fascinating to watch it all unfold on like crypto Twitter. We just have like 3 more minutes to go. It'll be great to see if there are any questions on the floor. Yep, cool, go for it.
Wow, that was keen. You didn't
No,
even
that was a very
finish
quick
the sentence.
hand up. Cool, just bringing the mic, no problem.
Hello, how are you doing? It's Nick from OpenBlocks NFT game project. From your perspective, because I was listening to you very carefully, from your perspective while making the research about the project, what are the elements that make this kind of projects that you choose stand up? Or, for example, help us to stand up on your targets, let's say, or on your radars?
Directed at
everybody. All of you.
Anyone can jump in.
You got to pick a person. Point.
Richard, go for it.
Yeah, in games, look, I mean, famously, it's super hard to pick out one game that's going to be successful. An outfit like Supercell that did produce Clash of Clans had to build whole culture in their organization to run many experiments in parallel. Arguably, that's what Guild Games and Blackpool and so forth do in managing DAO-based allocation of funds to lots of different games and lots of different players. So, how do you stand out? That's a tough one. But if you've got great technical chops from a decentralized perspective and you've produced beautiful and successful games, then that's probably a good starting point. But that's also probably wrong. But it's different for other kind of companies or projects.
I think it depends on the stage you're investing at, right?
Well.
So, like at the stage that we're investing at, generally there is nothing but founders. Like there might be some tech, but I mean, you're really betting on these people to find value and be able to execute on it. And, often we have projects come to the accelerator and they'll come out, if not totally different, partially different. I imagine, as you kind of get into later stage, you're going to be much more metric driven. There's going to be some, hopefully, fundamentals that you can track and measure. But for us, the kind of tried and tested thing, going back to the founder thing, the founders that work best for us, we found, are the most humble ones. And actually, the great thing about an accelerator is to acknowledge you even need to go into one. So I never went into one. I thought I kind of knew it all, wrongly. People that acknowledge that they need to go into an accelerator, that they need help, that they need to accelerate certain elements of what they're doing, generally we found go on to be very successful because of that humility. But that's like a personality trait thing.
Cool. Any other questions? Oh, yep.
Hi, everybody. I'm Ken Berger from Lorem Labs, and I know there's a few of you on stage. I won't look at anyone, but around 2019, it was pretty tough to, raise money from, LPs, especially traditional ones. It feels like things have thawed considerably and going a lot more mainstream. So my question is just generally, to everybody, what kind of sentiment are you finding from LPs, and to what extent is there still a stigma? What are you finding?
I think in our experience, people are a lot more open-minded, and there's a huge macro overlay, right, which has been drummed on a lot, like super low real rates, asset inflation and whatnot. And I think with every vintage that people stay out of crypto, they run the risk of getting in trouble. So generally, I think we've found, the space become increasingly open-minded. Not only that, our LPs also want to make direct investments too, and learn how to custody and learn how to actually do taxes and K1s. And we've been very impressed with that open-mindedness.
Any last point? Otherwise, do you want to?
No, I was just going to.
Final point.
I think Europe. I'll get a little plug in for Europe. I so I've been in my fourth decade or something crazy, but over the last 10 years, it's been transformational for Europe in terms of LPs' enthusiasm for backing managers out here, which is boring as that is. That's pretty important for making sure it gets through to the startups here also. But actually coupled then with what Min said about the macro perspective and people getting comfortable that this is not a criminal activity, crypto. I just recently had a DM on Twitter from an endowment fund from a university in the United States saying that they'd like to look at investing in the fund. I think that's that was new for me at least.
Yeah. Cool. Well, on that note, we're running out of time. Just want to thank you, Richard, Min, Jamie, and Jill. Thank you, guys.